The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, as we take a look at the market action that we saw on Thursday, I got to say, it's getting a little old saying new contract lows in spot corn, but we saw that happen again on Thursday. Just more weight on these grain markets, soybeans hitting some lows as well. Wheat did its best to hang on, but overall, the downtrend continues, it seems, in the grains, mixed action in livestock. Let's talk about it. Let's put some perspective on where things stand. Joining us for a conversation, happy to have Brian Doherty, Senior Market Advisor at Total Farm Marketing, join us here today. Brian, good to talk with you again this week. And as I said, it's not fun to talk about contract lows here in this grain market, but alas, here we are again on Thursday with more new lows seen in the corn market, especially.
You bet. And, just kind of looking at this, look at the price and you kind of gulp. But I think almost anybody who takes a look at supply and demand tables would say, well, that doesn't surprise me. But when you'd add on to the end of the equation, this has happened in mid-February, not August, when you see a big crop at hand. So is the market just way over its skis or what's going on? And I think what's going on the last leg down here really is just this realization that farmers have had a lot of unpriced corn that needs to move and a lot of basis contracts they need to make decisions on. And I know just from my end, if we're any litmus test, a lot of calls from people that have really good questions we maybe haven't talked to in a while or never talked to them. They call and say, hey, I need some guidance here. Lot of unpriced corn. It's just the way that it panned out, but it does go back to maybe a year ago at this time and just kind of reminding our listeners, our customers that when the market does offer value, let's make sure and concentrate on that, not necessarily the price, because price last year at this time, it was good relative to history. It was poor relative to the old crop. You kind of felt like you were getting taken advantage of. But it may have still been a good point to have some contracts locked in, or what I would have done and recommended was a pretty aggressive put buying for the new crop, either in the December or March puts. Now, I know we're past December and the March puts went off in February, but there could have been rolls or things in there. So anyway, bottom line is there's just a lot of corn that needs to be priced. There's not enough weather yet in South America to have impact. I was a bit surprised at beans today. I thought we might get some push on what I felt was the latest weather forecast, and I think looked pretty warm and dry in more of the central regions of Brazil, central, northwest regions, and then maybe the northeast regions of Argentina. And the market looked like that was going to happen, and the wheat had a good run, and then they gave it up again. So again, this, whether algorithms or managed money or just people saying, I'm going to sell every green on the screen until something tells me otherwise. But again, corn, new contract lows, soybeans closing in those last May lows from a year ago.
Well, to your point, I know it's kind of that time of the month too, with a lot of those basis contracts that folks are just they're forced to make a decision here. It's either, to your point, take it to town. We have nice weather, get some cash flow for rent or equipment payments, things like that, or look to roll it. But you kind of have to you have to make a decision. It's a tough decision, but you kind of have to make a decision in this window, don't you, Brian?
Well, I think you do. You got to decide if you're going to keep rolling into that carry, and I think looming larger on some producers' minds, if they've rolled from several times now, if they've taken percentages of that money up front, how close is that getting? Where they may owe the elevator, or the elevator is saying, hey, you need to liquidate, otherwise you're going to have to pay us. So we started hearing some chatter of that today. I don't want to sound like that's the case across the board or a case at all, but I was hearing some chatter today. And gosh, when you drop as much as the contracts have, if you take a look at March corn, 406 today, And let's just say you rolled in at the end of December at 481. Well, that's 75 cents down. That's a big percentage change in that value. In fact, that'd be 75 divided by what price did I say here? Just 75 divided by 480. Well, it's actually a little bit higher price. I'll go 75 divided by 481. Yeah, you're looking at 15.6% down in just 6 weeks, 6 or 8 weeks. So, so anyway, the point of it is the money's still short. The funds are still short. They're near record short. They don't typically V bottom out of that. That means that if they're going to stay strongly short, unfortunately, it's usually a couple of 3 month window.
Can the wheat markets potentially maybe help lead us out of the doldrums here, Brian? I mean, wheat's been performed fairly well in the face of everything this week. I just wonder if that can maybe be a canary in the coal mine of sorts. What do you think?
Well, if you look at the July Chicago wheat contract, for example, that's a new crop contract, a couple of days ago posted a very, very impressive bullish key reversal at the bottom of the market. So that just means prices on the 20th went into new contract lows and finished the day much stronger, but more importantly, took out the previous day's range and closed higher. And that's a good signal. Kind of did nothing yesterday, came back today into the close, finished a little higher. So you might be seeing some signal there. That's probably the best bullish key reversal I've seen in the wheat for. You'd have to go back for a long time before I've seen that pronounced. And when they get pronounced like that toward the bottom, you'd want to believe that that's signaling something that went from negativity to really bullish all in one session and a good strong close. But it's the follow through that matters. So today it really looked impressive this morning, but gave that up. Still finished a little positive, but again, it's just sort of that wet blanket of negativity. When you see green, sell. That's how the mindset has been in the marketplace. But I think the thing to watch here in wheat is probably India. India is a very large grower of wheat. They've had become an exporter in recent years. Their internal supplies are getting tighter and tighter, and now they're headed toward a window of critical time. And I don't know a lot about India's wheat growing capability, but from what I've learned and seen over time, it is a crop that can do very well or be very susceptible to weather developments and too much rain and disease and things like that. So some really critical time coming ahead for the Indian wheat crop.
I know maybe something favorable for corn. Ethanol production numbers. Let's see. Inventory fell 308,000 barrels on the week ended February 16th. Production was up 1,000 barrels to 1.084 million. So maybe some supportive numbers there, Brian. But then two, as was rumored all week long, EPA approved that Midwest governor's petition for E15 on Thursday, but delaying implementation to 2025. I guess I don't know how much that's going to have an impact on the corn market per se, but again, some of that ethanol news, maybe, good here, maybe a little neutral to bad here. I guess I don't know how much that could impact the corn market right now, Brian.
Yeah, it could impact it in the longer run significantly. We're talking the ethanol. So you're starting to see some of those dots that you can kind of connect or want to connect in the long run. And the big picture perspective that when you connect those, you're going to see eventually some of those dots come together. So I'm not only thinking about the ethanol, but today we saw a sale of Milo to China. Now that's interesting because it's a competitor to corn. And so China's buying something that might be cheap. Maybe they're starting to send a signal. I'm inclined to think that markets move on momentum. So right now you just don't have any momentum. And when I look at the big picture, once we start gaining momentum, then all of these things kind of come back into the fold. And we talk about, well, China started buying Milo and the ethanol number will be up. The corn grind was up in ethanol. 2025 looks better for bioenergy. Here's an interesting thing too. Now I'm just this. It's just a sort of observation, but the electric vehicle in the last 30 to 60 days to me doesn't seem to have gotten the best of reviews. There's massive recalls and continued talk about the making of the energy and the precious metals from China, and a dealership in I saw on TV a dealership owner. They're just not selling the trucks, right? The
Mhm.
F-150 trucks, and Ford's shutting down. So ultimately, there might be quite a bit more room to see um, higher energy blends from organic or from corn to really have impact in the next 5 to 10 years than I think the market was expecting 6 months ago. It seemed to be on a one track mind that everybody has to go battery, and battery's starting to get some pushback, I think, in a pretty big way.
We're joined today by Brian Doherty, Senior Market Advisor at Total Farm Marketing here on the program. Brian, I want to jump over to livestock just to get some thoughts from you there quick before we kind of wrap everything up here. Cattle and hogs, cattle came off the highs a little bit on the day Thursday, but still a fairly decent day in cattle and hog trade. I know we got a cattle on feed report coming up here Friday afternoon. Feels like the trade really kind of squaring up positions ahead of that report. Would you agree there, Brian?
I'd agree with that because it depends when you looked at the cattle market this morning. Boy, it looks strong, and then all of a sudden they close. Whoa, what happened there? I just think any good bull market, what'll happen? It'll have days where it's up like that, and all of a sudden it just runs out of buyers, and so the sellers come in, or it starts to trip sell stop orders, and in front of a cattle on feed report, that is certainly to be expected. I think also expected, though, is the cattle on feed report is going to again. It's not like a broken record, but again, confirm tight placements, tight inventory numbers. The herd is small. That thing isn't going to magically change overnight, and there's got to be a point here where the producers decide, what, corn's cheap enough on and beef's high, and I'm going to start holding heifers back in a more aggressive fashion.
Mhm.
I don't think we can count on the dairy industry to supply the beef, even though it's a good supplement. In the newer sort of mindset of breeding for beef, um, that works when prices are high, um, which they are now. So ultimately, though, the herd is limited. I wouldn't read too much into today. Again, we look for signals near top. I don't know if this was pronounced enough. I was just looking at some of the contracts here, but I, I I'd recommend puts. We've had enough recovery to do that, but I like the way the charts look. I like the way the feeder charts look. But today was certainly a day to keep us sober on how bullish to be in the cattle market.
Yeah, good thoughts on that. How about the dairy trade? Speaking of trying to find some green on the screen, I'm seeing a little bit there.
Yeah.
Talk to me what you're seeing right now across dairy futures, Brian.
Yeah, so you did see some bump. So I always look at the products. Some bump in the cheese and butter, but blocks were down today, penny and a half. Uh, Milk production report came out yesterday. Some downward revisions into the December and then the January winter or January month, and then sort of a confirmation that the herd just isn't growing; it's shrinking a little bit. Now, the report itself, on the surface, when I looked at it, I thought, well, it's not bearish. I don't know if it's bullish, but the market seemed to think it was today. They didn't so much remember the report's out at 2 in the afternoon and the dairy market's open. So the dairy market can trade that report. It didn't really show as much yesterday. But yeah, 49 higher is the last trade right now on April milk. Gives a little new life into that contract, 1769. It does put it right where it was just about a week ago, and it's still below where it was about 10 days ago. But it's also now well off the low from the last 5 or 6 sessions as well. So starting to show a little strength. Unfortunately, I can't get myself all bulled up on the milk industry. The cow herd is still there. It's flatlined out. Production's more or less flatlined out, but it's not retreating. 24 states, so there's just enough supply, I think, to keep rallies in check. And with cheap corn, I call it cheap now because it's below the cost of production. Um, the dairies have a good thing going on the feed side. Not only cheap, but it's available, and they've got both hands on the steering wheel there.
Well, Brian, I kind of want to leave this open ended here to kind of wrap up today. You're always good, kind of giving us that 1,000-foot view and some common sense here with these markets. And to your point earlier, you're fielding a lot of calls, a lot of conversations right now. Some tough conversations to have really across the commodity livestock sector in a lot of different markets here. So what would you tell folks? What would you remind them of here in this window about, taking a look at their marketing plan and making some of these tough calls right now? What would you say to folks, Brian?
Well, I think just revisit your strategy and your plan, and if you didn't have one, let's start to develop one. Because I think a lot of people, the plan was kind of ingrained. Well, let's just store and see what happens. Because we've had 3 4 years that if you were patient, you got some good rallies. Didn't get that. I think I might have mentioned this last week. If not, I'll mention again. But also just remind ourselves the difference between value and price. Right now, the price of cattle is lower than where it was a couple of months ago, but the value is really strong and needs to be defended. So think in the terms of what the value of the market is relative to what that means to you, rather than what the price relative to what the former price was, or where price you think it could go to, and then start building some strategy around that. Ultimately, in the grain markets, if you were holding corn 15, 20, 30 days ago, the market's down now. Does that change your mindset to say, I'm going to give up and I'm going to be done? That isn't a right or wrong, but if that's the case, well, then you sell. But if you're thinking, as it was 20 or 30 days ago, we're just down lower, make sure if you sell this because you need to, for whatever your reasons, that when you do that, I would be pretty just cinchless. I would then go back in on paper and likely buy a call. I know you're buying carry, but you're buying a fixed risk with the mindset that if the markets start to turn, a rising tide is going to lift all boats, and now you're back in an ownership position there. I don't want to give anybody false hope here. We've got some big inventories, and the market's really factored it in, but I think we're getting close to a low in corn. Not sure on beans. I think we're close, if not already, in wheat, and we'll just kind of leave it at that and start building strategy around that.
Good stuff, Brian. And if folks want to reach out to you and ask questions, I know a few different ways to contact you there at Total Farm Marketing: phone, email, website. How can people reach out to you, Brian?
I would first ask for a phone call, 800-334-9779, Jesse. And then I would ask for an email, Brian with a Y, at totalfarmmarketing.com, or connect with us through our website, totalfarmmarketing.com. And we'd love to talk to you there. But don't hesitate to give us a call.
Brian, thanks for the time. Appreciate you joining us on Market Talk. Have a great weekend. We'll talk to you again next week.
My pleasure. Thank you.
That's going to do it for the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.